Okay, I'm just going to run through with Mike some of the key market overviews, and then towards the end, we are going to look at some of the specific opportunities that we've identified in the market for this year. So, Mike, from Henwick Park's perspective, what's the sort of big picture outlook then for 2023? How would you say the market as a whole is shaping up, and what can we expect as we move through the year, apart from a lot of uncertainties? Sorry.
Okay, well, I think the first thing to say is that 2022, in terms of inflation and real returns on deposit-based investment, were actually providing some sort of evidence that the alternative investment arrangements may actually provide a better return. That's on the on the demand side of the equation. On the supply side, we were finding that the traditional banks, the go-to banks for credit for SMEs, for example, worldwide, was diminished. Therefore, there was a big move, particularly in 2022. We found for alternative forms of finance, both in terms of providing credit for the small business, and also in terms of providing a return for the investor. So that's sort of something that we found quite a strong message in 2022.
Okay.
The prediction for 2023 is slightly different, in as much as interest rates have risen, which obviously makes the supply side still pretty tricky for the small businesses. In terms of investors, they are beginning to see a better return on deposit-based investment again now. So we're not quite certain yet how that's going to pan out for the alternative finance arrangements as an investment. That's going to be for example, there's one client we have that provides financing for renewable, specifically human waste plants, and provides finance for that, and investors, mainly institutional investors in this case, well, totally institutional investors actually, they can, they were getting returns of around 7% per annum over a 13-year period, which is very attractive, obviously.
That's good, isn't it? Yeah.
Yeah. Now, obviously now the question is, can those returns be increased, and how will they be affected by returns compared to the deposit-based interest products that are out there at the moment? So that's the uncertainty, but that's just a generalization. Obviously there's a lot of different options still available for both the investor and the SME.
Okay, but how are you managing to track these trends then? Is that just from your personal experience at Henwick Park and your own sort of internal figures, or are you also looking externally at what's happening out there?
Yeah, I guess I want to explain very briefly what Henwick Park do.
Sure, of course.
First of all, so effectively, we carry out various roles in the financial services sector, both for UK-based clients and overseas. We have a database of around 9,000 contacts. Okay. That's wealth managers, family offices, pension funds, trusts, etc. And we have found over the last 12 months, we have found a keener interest in alternative investments in that regard. So our main thrust, I guess, is to distribute. So we're funds or propositions that come to us, and we currently have about 8 clients on the go, funds on the go at present, and they range quite sort of broadly from, say, a Swedish property fund to the renewable energy alternative I was just telling you about, bonds as well, and also the other area that we found, we've been in discussions with various companies about the receivables market.
All right, we might let's come on to one or two of those. Can we just clarify what you mean by supply side and demand side?
Okay, well, I describe the supply side as far as alternative finance is concerned. I'm referring to the requirement for smaller businesses to be able to obtain credit to help with cash flow, etc. And from the sort of go-to banks of the past, that's been drying up. Hence the sort of need for alternative forms of credit for these businesses, and that's a worldwide phenomenon.
Do you think that your average SME is aware of the different opportunities that are available in the market? Is there sufficient awareness among that community? And also, what sort of size of SME are we talking about? Because it covers quite a wide range, doesn't it? It's not necessarily micro businesses, but sometimes
they're certainly not. We're certainly not talking about publicly quoted businesses. I mean, for example, at the moment we're talking to a proposition in Latin America, a specific Latin American company. Country, a specific Latin American country where, unquoted companies, but quite large companies, and the important thing there is companies that have a service relationship with blue chip companies like Coca-Cola, Mercedes, etc. They have quite a large potential invoicing book, if you like, and they've in fact proven that over many years in most cases. That they're not necessarily one-man bands, far from it, but they're still very much unquoted companies generally, and they need help with cash flow. You're pretty much guaranteed, if you're doing everything right as a service, and that service can be anything really, from telephone network to paper clips. It doesn't matter, as long as there's an ongoing relationship with the companies concerned, the blue chip companies concerned. And so there's a trend of them invoicing these companies, long-term sort of contractual relationship. As you know, all debtors, we call them that, will take as long as possible to pay. If the terms are 90 days, then sometimes that goes over a bit. But certainly there's very often a 3-month sort of wait for invoices to be paid. Now, if the SME, if I can call them that, need capital to develop new initiatives, they may require new plant. They may just need sort of help from a cash flow perspective. Then they can, under the right conditions, have the invoices paid in advance. At a discount, obviously, and that's how that works. Now, in terms of our companies aware of it generally worldwide, well, aware of that particular option, for example, that's part of our job. It's part of our job to make make them aware of the availability. But more importantly, from our perspective, we're working for the actual finances, if you like, and finances obviously require investment, so they can lend. and that's really where the demand side comes in. We're putting in an attractive proposition. I have to say, we're not Henwick Park are not retail, so we only deal with, as I mentioned earlier, the institutional side of things. That's wealth managers, family offices, pension funds, etc.
Sure.
So we don't actually go directly to the investor. It's very much putting together an attractive proposition to the people I've just been speaking about, the organisations I've been speaking about, to persuade their investors to, or maybe a family office where they might be putting family money into something like that. Yeah.
But do you think that more can be done to raise the possibilities of financing amongst the business community? Or is it just a case of following where the money is coming from in the first place, and then going after potential sort of issuers, once you've got some investment in place?
Yeah, they've got to be aware, obviously, of the issuers that are there in the first place, and obviously the issuers themselves. And this isn't really our role. The issuers themselves will be promoting the availability of funds. If the criteria is met, if the risk assessment of the business stands up, then, and that's obviously a very due diligence is high in that regard.
Sure.
Then they're making their availability aware. Our job is there in the first place, and obviously the issuers themselves, and this isn't really our role. The issuers themselves will be promoting the availability of funds. If the criteria is met, if the risk assessment of the business stands up, then, and that's obviously a very due diligence is high in that regard.
Sure.
Then they're making their availability aware. Our job is to ensure that the funds are flowing in to them to lend, basically.
Okay, great. I guess what I'm driving at is, if there's going to be an increased need for this sort of investment and finance, in the next year, for example, are we satisfied that both ends of the market are communicating with one another to the extent that they could be, to maximise the opportunity?
Yeah, well, I guess that's where organisations like us come in. Where we're marketing, because we tend to be approached by the supplier, so by the fund or by the potential fund. Quite often, it's set up as a investment vehicle, which you would not describe as a fund. And one or two of those are now sort of being taken to Luxembourg to create the appropriate vehicle for a fund. So that could be a CCAV or a RAIF, depending on what structure the people we approach feel they can achieve.
Okay, great. I mean, you have a focus that is very much international as well as national. This is a big question, but where do you see those international opportunities this year coming from? And is that part of, are we going to get like a temporary trend in focuses of interest, or are there general markets that you think maybe looking slightly longer term are going to be impacted?
Well, from our own experience, it's been pretty much worldwide. I mean, we have got a large number of well, not a large number, but a significant number of funders out there who have got backing of the UN, or so we're looking at developing countries, frontier countries that require their businesses within that and their economy to be boosted with finance. And so we've certainly seen that trend, but I have to say that we've been approached by all parts of the globe, basically.
Okay. So the UN is actively trying to create the market in certain parts of the world.
Yeah, I mean, it really is a question of developing, I guess, underdeveloped areas in some countries,
Any
and quite
particular
often,
areas spring to mind? Sorry.
well, Africa, for example, we've
Okay.
seen quite a bit. And also, there quite often is a green element to it. There's an ESG element to this lending,
Okay.
as far as the developing nations are concerned. I'll give you one example of that, or I'll give you a couple of examples of that. Quite often, it's to do with, for example, housing, development of housing. Then the houses themselves have to be the buildings themselves have to sort of comply with all the various environmental requirements that are ratcheting up now in that regard. So they've got and as far as the funds are concerned, that gives them an extra sort of attraction to a number of potential investors who may have a particular interest in the in environmental issues. But you've also got the social, and we have for example, we've been in discussion with a fund that is providing finance in Africa, but specifically for female-led businesses. So again, that's another example of the type of thing that is being developed at the moment.
Okay. Fantastic. Right. I think just for the final sort of 10 minutes then, I want to sort of just go over or even sort of restate some of these points then about alternative finance for businesses
Yeah.
and for SMEs. I mean, just how excited are you about the possibility then, given all that we've just said about what might happen in the next year or two?
Well, I think it's certainly going to be more of the same. I mean, like I said, the big unpredictable now, the big unknown is inflation and interest rates.
Yeah.
I mean, there are a lot of commentators out there that's saying inflation has now peaked, certainly in the UK. Others still think there's more to come. So it's a difficult one to predict, and that obviously has an impact on interest rates as well. And then the relationship between the traditional methods of investing and funding compared to the alternative methods. So certainly in the last year or so, the alternative finance area has looked very attractive. But it's going to be interesting to see how that develops this year. But it certainly won't stop the various suppliers of the funds involved in on the alternative finance side from trying to forge ahead.
Great. Okay. So before this conversation, we isolated sort of three broad areas then of possibility. Those being agri bonds, green bonds, and receivables. I mean, we've sort of mentioned these areas in passing. Or is there one of those that we've not yet talked about that we should sort of focus on for a couple of minutes?
No, I mean, I attended a webinar recently, for example, with Investec, and you mentioned bonds, but they may not be bonds. They may actually be a fund, but it's finance. You're absolutely right. But
Okay.
Bonds obviously have a specific structure. I went into an Investec meeting webinar, and they were basically focusing in the hour that they were presenting with a number of speakers from different asset management companies, and they're focusing specifically on the bond market, and more specifically on the green side of the green area of bonds. So bonds provide, very much involved in, again, in the ESG side of things, particularly the environmental.
Yeah.
So
okay.
that's one trend. Do you want me to go on?
A little bit more, yeah.
Okay, so I mean that's one trend. We found fixed interest, for example, last year, because of the specifically because of the globally economic challenges. Without stating the obvious, they were struggling a bit in 2022. So again, it's going to be interesting to see how that develops this year.
Okay. With these new types of investments,
So I should have said fixed income rather than fixed interest. Yeah.
okay, got that. Are the mechanics of these investment vehicles sufficiently well worked out? When we're talking about alternative, there's got that suggestion of new, it's a bit experimental. Is it operating to the same sort of high level of sort of scrutiny? What your more mainstream, longer term types of investment would be subject to?
Yeah, very much so. In fact, there are sort of new rules coming in the EU, for example, on sort of investment passports and marketing passports, etc., in various EU states. So to actually create a fund, an alternative fund, is going through the hoops. There's a strong level of regulation. They themselves, when the funds, when they're funding enterprises, SMEs, they will do an awful lot of due diligence to assess the risk. The risk being that, for example, they're not going to get the income. The SMEs aren't going to get the income they say they're going to get in the future. So, a lot of historic data is looked at. A lot of, all the sort of normal credit sort of assessments would be undertaken, because, you can't offer a fund to the investor where there's a high level of risk, because, I mean, you can state there's a high level of risk, but you're not going to get many takers. In effectively an area that's challenging traditional deposit-based investments.
Okay, and just to restate, this is potentially a very new and exciting form of finance for SMEs, where traditional forms of credit are simply drying up. The market is still uncertain, so expanding the horizons for the clever SME and the clever investor, that could be a very good trend moving forward.
Yeah, I mean, we've had for a long time factoring. That's always been around. What seems to be the trend is that there are more and more innovative means of providing the funds for factoring, if you like, and or providing a rationale for that type of investment in an SME.
Okay, that's an interesting sort of way of looking at it. Just briefly to go back to the idea of receivables funds. Is there anything more that we can say on that? Is this like a potential new area? I know you talked about the Latin American business that was getting involved. Could we see an uptake and a growth of that type of fund in Britain, for example?
Yeah, I mean, well, absolutely. I mean, one of the funds we're representing at the moment is seeking is funding UK plant effectively,
Okay.
and is seeking UK investors. Although at the moment, their investors are again pretty much worldwide. I think possibly the States is always an issue. Is the passporting you need there to you can't, European companies really cannot market or sell their funds to American citizens. There are, ways to enable that, but that's the basic rule.
Okay, great. So just finally, what's the outlook then for Henwick Park as a business moving forward this year?
Well, at the moment, we're filtering a lot of inquiries for this type of proposition. So in terms of taking on new clients and helping the market and distribute their funds to certain jurisdictions of their choice, sometimes worldwide, sometimes they've got specific areas of the globe they want to target. So that's pretty busy. I mean, we're as Henwick Park, we're taking on new clients all the time. We're about to start working with a UK small cap company, small cap fund, next month. This month, middle of this month, as a new proposition. But we have these other discussions going on with other potential clients as well. So we're keeping busy.
Any final message for the readership?
Well, the message for your readership is that, keep open-minded. When you're looking at, the credit and finance markets, there's a lot to consider. There's a lot to choose from, and that will continue, I'm sure.
Thanks, Mike. That's fantastic.
We actually fundraise for various funds or propositions that come to us.